Good morning, all. CamelbackTrading.org coming to you this Tuesday morning, May 3rd. And we're looking at Window Trader's market profile of SPY, IWM, and triple Qs. And after a big short covering rally yesterday in the last hour of trading, as you can see, we've been trading basically inside of M's range or above most of the morning for all three of our indices. Yesterday's volume was the third highest of the year. Not coincidentally, the highest volume of the year first occurred on January 24th when we put in a yearly low. And then on February 24th when we put in our yearly low prior to yesterday taking it out was the second highest volume. And now yesterday we put in a new yearly low and that's our highest volume. So again, not coincidentally, I was looking on Twitter and other platforms. People so surprised how the market rallied yesterday, and again, that's just a function of people just not understanding the market and being uneducated. Unfortunately, we talked about, look at the difference between Friday and yesterday. The huge difference. So Friday we held single prints in B. The market attempted to rally, failed, and we went out with two more sets of single prints. It shows you how much the power of trend day, which means having single prints as opposed to not. So here's Friday where we held single prints and the market couldn't rally, as opposed to yesterday when the market pushed down just like it did on Friday, but held no single prints, and finally the shorts gave it up. Pre-market high is 416.74. Overnight low 412.36. So what's the game plan? Well, again, we have a day and a half basically before the Fed meets tomorrow afternoon. I wouldn't be surprised if we take out yesterday's high at some point and trade in a 3-day balance between Friday and yesterday prior to the Fed. We have really nothing to lean on from yesterday except now obviously our overnight low. We had an 8-wide POC, but for a $10 range, until we decide if we want to come out to the upside or downside, you should have tremendous chop in here. If we do take out yesterday's high, again, then the goal becomes the same as it was yesterday. Fill those single prints in K, get into the middle distribution, and then see if they could work their way up to the other set of single prints. So what is the game plan? Well, until you take out yesterday's high, the daily is down. So we'll see if they defend it. So if you get up towards yesterday's high, you can take a short against it the first time. But once you get above, I would get out because now you're back in balance. And not only that, more importantly, these shorts will start covering from Friday. So they'll be very comfortable as long as you stay inside of yesterday's range. Once you take out yesterday's high, you should see some more short covering. So that's a possible short. In the next 75 minutes, if we open above C's high and inside of J's range, then you could take a long then against both yesterday's high and basically L's high from Friday, which would be the upper end of the lower distribution. So those would be a short play against yesterday's high, a long play above it. If we open and start just bouncing around inside of yesterday's range, you're going to need to wait for more market-generated information. And then just on the daily, again, the daily's down. So first things first, take out yesterday's high and come into a 3-day balance. Thanks for the likes and subscribing. Good luck trading today. And we'll recap at 4 p.m.